All right. Greetings, Jeffrey Scott here, and this is my Market MRI Pro update for February 12th, 2025. I'm going to use Tradestation today. We're doing some work on the login feature of Market MRI Pro, and it wasn't available to me. But the first Market MRI tool was actually in Tradestation. So I titled this, The Markets Rally Off the CPI Lows, but finish mostly lower on the day. Again, email marketmripro@gmail.com, among the others that you may have of mine. This is for educational purposes only. Anything I should talk about should be taken in the spirit of education, not investment advice. The intent is to demonstrate how I do top-down trading using various different tools. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks at options should be considered risky, and you should consult with your financial advisor before making trades. And I have tools on multiple platforms, and as I mentioned, I'll be using the Tradestation platform for today. If you like these videos and you want to get my daily comments, just join my top-down Google group, Top-Down Trader. There's no cost. You don't have to own anything of mine. You don't have to ever buy anything of mine. And we have a dialogue about the markets. And I'm there to support my tools if you have them, but come and watch, participate. Doesn't cost you anything. One of the things that we do in Top-Down Trader is something I learned from my mentor, Ian Woodward, to create a list of the best performing stocks as you approach a top, and then track that index, and when it breaks down, the market's up. But as long as that holds up, you can still think about being long, even if the macro markets are giving you mixed signals. Well, we put this together kind of near the top in November. We rallied a little bit, and then it looked like we were selling off, but they really never broke down. And in fact, we set an all-time high 2 days ago for this index. So we're not broken yet. And look at the last 2 very negative days in the market, or at least concerning days in the market. And we're really off the highs, but certainly nothing broken down. So we're going into Thursday morning, and I think the important thing here is, this is last week's, my bad. Well, the important thing to talk about is the PPI, which will be coming out in the morning, and then we have a slew of earnings. Sorry about that, I forgot to update that one. All right, so in Tradestation, this is my weekly timing model, and just the only thing to point out that's different today is that if the market ended right here, we would probably be in a sell signal on the Russell. We'd still be in a buy on the others as they remain above the WMA. The bongos and all of them have gone, well, at least on the spiders and the Russell have gone to a sell. But you don't flip out of a buy mode until both the prices below the 30-period WMA and, these are weekly charts, and the bongo is red. Now, the interesting thing here is we're seeing a number of Hindenburg omens firing on the weekly charts. And if we look at the daily charts, we're seeing them as well on the daily charts. And for those that have followed me or Ian know of our belief that the Hindenburg omen is a value, we recognize that so often, 1 out of 4 times, or 3 out of 4 times, it's a minimal change. But there's never been a bad market or correction that was not preceded by the Hindenburg omen. So we've got the Hindenburg omens, and this is just always calculated. I believe this is on the NYSE. The internals on the NYSE are great in Tradestation. This, for whatever reason, they don't no longer give you access to the NYA or the NYSE chart. So a little bit of trouble on the timing model, potentially. On the daily, looking at it, notice that on the spider, you haven't flipped to a sell in the bongo, so you're still going to be in a buy. Same on the Qs. We're close to flipping to a sell on the diamonds because the bongo's red, but we haven't closed below the WMA, and we're in a sell signal on the daily Russell. So at best, mixed signals, choppy market, and I think it looks kind of like that leaders index looked, where it's going sideways. Some good days, some bad days. Now, I mentioned earlier that we saw a remarkable move. Most of the pullback occurred before the market opened. And you could see here these big tails. This would be the futures on Wednesday morning. You can see Thursday, they're already up a bit, 13 points. Here's the tail on the NQ, gapped up above resistance overnight, some good earnings. Here is the tail, bottoming tail on the Russell, still in a congestion zone, and even a bottoming tail on the Russell. Now they're all up after hours. You can see the VIX is bouncing around on support, as is the US dollar. My concern has been this overhead resistance. Now the interesting thing is, and remember, a bar isn't closed until it's closed. And this is a daily of the NQ. So it's got, 20 hours left to go, give or take, or 16 hours left before it closes. And more than that, I can't even add, 4:30, about 16 hours. It broke above resistance, but we'll see if it can hold it. If we look at the markets, you can see what happened during the day. And you notice most of those tails are gone because the market had already started to recover before the open. We've got bounce off support. We're in a very narrow wedge here. It is going to resolve quickly, I would expect, to the spider. I'm looking for a move higher, but we'll see. If you look at the Qs, it's traded up to resistance as well. Also looks like it's in a place that you expect resolution soon. The diamonds have to deal with overhead resistance, and they pulled back some, but each of these are still above their 50, and to me it's still orderly pullback and nothing that is horrible. You look at the Russell, a little bit horrible. It broke through support on the last one, because this is a cash markets, through support on Wednesday. Again, the VIX sitting on support and the dollar at the low of their range. Now, those are all good things for the market, I guess. Now, gold was up a tad, as was silver in the markets on Wednesday. You can see oil has pulled back to support, and natural gas is making another run, actually giving a nice pattern of pullbacks and moving higher. I guess the worrisome thing in the market was that CPI, and as a response to that, bonds dropped hard, and we could see that we had significant increase in the 10-year and in the 30-year. That's not going to be good for markets, and it's probably partly why the small caps underperformed in the markets on Wednesday. Now, I have a number of scanners, so I'm going to go back old school and look at the Market MRI Pro independent of the Sagar's tools. And what I ran tonight was just a pullbacks and an uptrend with some dots. And what I really liked is FLUT. So let's take a look at the chart here. The trend lines are automated, generated from Sagar's Q memory. It's not a part of anything I sell. It's something I bought and I love using. But what I liked about Flutter has been a leader. Here's the weekly. It pulled back to trend and rode up to trend. And look what happened. This is what I'm looking for the NASDAQ and others to do, which is to break out of this wedge and maybe give a nice little run to higher highs. You could see as we look at this chart, it had a momentum and a breakout signal coming out of a squeeze. You had a PSAR reversal. Your high jump is at 56, so you're not extended. Look at the breakout of relative strength versus the spider, and even the OBV turned up. So I'll be looking at FLUT, just to quickly look at a few other things. From a top-down perspective, I think the markets, obviously we see the futures are up, but it's still early. It was a remarkable recovery. So I feel better about the markets, but I still worry about the PPI, so I'm not going to be chasing much. You can see on the day only the Q was up, but these are all well off their lows. I remember seeing the Russell at one point down 2%. Now, there are a lot of different things that I can rank a list of ETFs. And a couple of my favorites are looking at change in relative strength one day and what comes up to the top. We've got Hong Kong, so we know China's been strong. Lithium, boy, this has been a tough one to trade, and it's still below resistance. Silver, you saw that silver had a nice session. I think silver and gold miners are interesting. And I could go down this way, but what interests me is when I start seeing the IBD 50, which are high growth stocks. And one of the things I talked about over this weekend were growth stocks were leading. So I might take this list, which came out of that pullbacks and uptrends, and let's look at some of the other high relative strength stocks. Big Bear AI. Boy, it's getting hard to chase, isn't it? High jumps at 100. GDS is one that's made my list often, breaking out again. Look at the weekly breakout. but the high jump is too high. So let's look at something lower. Wyndham Hotels. Running nicely up the trend line. That looks pretty interesting. Cantaloupe. Kind of extended. Let's look at two more. Gilead. This is, to me, right now, the granddaddy of the biotechs, this, Vertex, and a couple others. This one, I really give this company credit for ending the AIDS problem. Yes, you still get AIDS, but it turns into a chronic disease. They don't get enough credit. They had a beautiful breakout here, and look at that, a CPR, an EMS, a viable gap up, a volume, a breakout momentum. Again, not totally extended, so Gilead looks great as well. But the more I look at these, I'll just go down. Lou, we talked about over the weekend, and again yesterday in the top-down trader area. They supply materials to the nuclear reactors, another way to play that. But I think that as much as I look this, I'm still going to come back. Let's look at Gorilla Technology. That's too far. I'm going to still come back to where I was before, and I think that Flutter looks very interesting to me. And let's find Flutter again. And it's a high growth stock, as you can see. Relative strength of 94. And I love the breakout from a trend that had 1, 2, almost 3, 4 touches. So that's what I'll be looking at. Just to give you a little bit of glimpse of what else you get with the tools. You get my scanner. This is the market MRI scanner. It includes the dots, CPR, which is a crossover system, EMS, which is an early warning signal system. It has the bongos, relative strengths, and a number of others. It has the trading app. Why is the trading app cool? Because you can run this in a matter of minutes, and then it's an end-of-day tool, and then you can build filters. So rather than scanning again, you just apply your filters, which makes it much quicker. And those that know Tradestation know that Tradestation has its quirks. Anything else I want to show you? For those that are, let's just put Flutter on the 3 time frame. And again, you want to see, I want to see, what's the word? I would like to see the weeklies and the monthlies support what I'm doing. You've had a nice run on the monthly, a crazy nice run. You had a recent pullback and a breakout on the weekly. And you've got a fresh pullback to support just off the 50, which we call free parking, and a breakout. I think this one looks really, really interesting. And I'll be looking at it in the market. Have an awesome day in the markets, and probably be back to a Market MRI Pro tomorrow. And for those that like the wealth charts videos, I did a fresh one for stocks and docs that will be posted sometime around 8:30 in the morning. Have a great day.